G'day guys, welcome back to Pete's Investing. It's March 14, 2024. This is the silver technical analysis. Now we did hit our divergence, a bearish divergence recently in the last few hours. There's a retracing play, but how far is it going to go? Let's look at the options. So what we've got here is the weekly, the daily and the hourly, and we trade the lower time frames based on the weekly and the daily. In this case, we're trading the 1 hour. So basically we've got here the ADX 25, which is bullish on the weekly, bullish on the daily, and also bullish on the hourly. The CCI 150 is also a trend indicator, but also a divergence indicator. So what we've got here is when it's broken above the moving average bands, that's bullish on the weekly. Likewise on the daily, it's also above the bands, so it's bullish. Although we do have a divergence here on the hourly chart, a bearish divergence with lower highs versus higher highs on the price. Now we did actually project that last time, and it hit our target area, and that target area was the 23.38% Fibonacci level. So it's hit that target, then it bounced from that level into new highs. And I've got a little trend line there. That's where you would have entered the short trade when it broke through that, if you wanted to hit the immediate target area. Now it's gone higher. Let's look at the weekly and the daily in terms of what they've been doing. So I've drawn here a zoom out. If I drew here a Fibonacci retracement, you can see there it's been bouncing just short of the 61% around that level, and that's where we've got that resistance at 25.92 on the weekly, and it's been stuck in that channel for a number of months now. On the daily, zooming in a bit from that previous high, again you can see there it's broken up. If I show you where that is on the time frame, that point there is that little area there. So that's actually, you can see there the price is broken up through the 61%. That 61% is key. It generally means if it breaks through there, it's going to reverse trend, and that's what it's done so far. So at the moment it's broken through that 61%, and I've drawn a Fibonacci expansion in that recent range. And if I just show you what it's done there, you can see there it's broken above the 38% level, and it may well go as high as a 50% at least, or even a 61% or higher. So we don't know yet. There is a bit of a retrace starting potentially after that big bullish candle in yesterday's trading. Now on the hourly, as I said, we've got this bearish divergence, and it did actually break down initially, but notice there's still a bearish divergence still in play theoretically. So if we use that logic, we may see another retrace to the downside, and that would go from that recent low. So if I draw a Fibonacci retracement, that would be a next target level if it was to break to the downside. And this could still keep going upwards, but in this case we may even see the CCI start breaking to the upside as well. If that broke above higher than that point there, then it'll invalidate the divergence. But at the moment, it's still a valid divergence still in place. So it's hit it once, based on that level there. Even though the CCI has risen, it's still a divergence based on that price range. So I'll keep that in there as a potential target if it does break to the downside from there. If it keeps going up, we're going to invalidate that target and move our target range a bit higher. So what I've got here is the trading strategy, and the first rule is, just blow up this chart so you get an idea. The first rule is we trade long when the Heikin-Ashi is green, and we've got the Heikin-Ashi in the price chart here, and trade shorts when the Heikin-Ashi is red. That's the simple price rule. But the main rule is when the weekly primarily and the daily are in alignment, going long above this channel, then we take long trades. If the CCI is within this channel, we don't take any trades. And if both the weekly and the daily are showing short, we take short trades. So at the moment, I've got a back test here, and this is the average down approach, this is the stop loss approach. So when the CCI breaks above the moving average channel there, we take our first trades there. So you can see there the average down approach has generated 6,410, and the stop loss approach has generated 215. That's in spite of the divergence still in place, so just be aware of that. That's always an area to be careful of. Whenever you see a divergence, you can reverse at any time, and as I said a few seconds ago, it may actually reverse in the coming hours and days possibly, so keep an eye on that. What I've got over here as well is a stochastic 7.3 parameters. And you can see there when it breaks to the downside, or when it's overbought and breaks below that moving average, that's a potential close or position as well. And that gives us an early exit. So a bit tighter than using the CCI breaking into the moving average band. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.